Hey everyone, happy January. It is kind of cold and drizzly out there today. But we did get our RMLS statistics from the market action. And that's where the RMLS takes all the data that they've got from an entire month and then draws their statistics and then cranks that out to everyone. So the update we've got today is kind of a hybrid of what we do in our office for the weekly updates, the market statistics, and the monthly one. So for the monthly market statistics, comparing in some cases May of 2021 to May of 2020 is going to be sort of a drastic difference because in May of 2020 it was a different time than what we're experiencing right now. There was still a lot of concern and worry on the real estate market. Folks were still some were pulling their houses off the market in April and May. So they were withdrawing their listings because they didn't want to have folks coming through. So sales were a little suppressed until we got into July, because kind of June the market really started to take off, and then we saw the results of that acceleration in the market in July and August. So pending sales comparing May to May 20 to 21 are up 19.4%. And then the inventory of available homes for sale is down 48.6%. That's a huge drop. And we're still dealing with a really small inventory of homes. It looks like a really dramatic number, but what we have been following in our weekly statistics, and you can see the full running totals for those numbers in the link below to my How's the Market page. What we've been seeing in the weekly rolling inventory week after week after week is that number has been increasing incrementally, just about pretty consistently, like 100 houses out of just over 2,000 homes available, incrementally, consistently, week after week after week. So we know that the inventory is going up, even though we have sort of a dramatic number for how much the inventory decreased from May of 20 to May of 2021. The number of closings is up 62%, because in May we would have been closing the deals that we put under contract in March and April, a different market than what we have right now. The inventory of months, though, right now is it looks like it is record-setting low inventory in months. 0.7 months of inventory. The last couple of months we've been kind of holding steady at 0.8, which was a crazy number when we hit it, and now it's even smaller than that. At 0.7 months of inventory, that is very, very strongly entrenched in seller's market, hyper seller's market territory. Average sale price, this is the number that just kind of blows my mind when we're comparing the first 5 months of 2020 to the first 5 months of 2021. So it's a kind of a broader average. Month to month, you can have a few sales that really increase the average sale price and kind of skew the numbers. This is sort of a slower, a broader, a larger sample that we're drawing from first 5 months compared to first 5 months. The increase in the average sale price is 18.9%. Holy buckets, that's a lot. So I'm hoping that this is going to be tempered over the next few months or so, because that's an extremely big number to be dealing with. Days on market last year to this year is down 42%, so everything obviously is selling very quickly. And then the average sale price right now is $553,000, $553,500 for the month of May. Looking at our weekly, like I said, with our weekly numbers, the number of, our numbers could be a little bit skewed just because we're coming off of a holiday week. So we had Memorial Day weekend, followed by a short work week, and then another work weekend. And I feel like there's a lot of pent-up travel demand. During that week, there was a dramatic decrease in the number of showings we saw. The number of showings I was going on, the number of showings on our listings and the same for all the agents in the office. And coming off of that weekend, I am feeling the market picking back up, in acceleration versus that very sleepy week. So it could just be that week was a bit of a blip. A lot of the analysts that I've been following are saying that the market that we have right now is a market we're going to have through next January. I've previously been thinking that we might start to see some tempering on the market, and we have seen some tempering on the market, but not as much as I thought we would. During the frenzy of the first quarter of this year, we would see a home hit the market in the $450,000 range, and depending on the neighborhood, it could get 17, 18 offers and sell for $100,000 over the asking price. Now that same home might get 5, 6 offers and sell for $50,000 over the asking price. Everything is selling really fast, and it's still, accelerating at a crazy rate. But it's a bit of mellowing, and I'll take it. So, but at least it's not going down to, what I thought might happen, which is maybe 1 or 2 offers per home that hits the market, and maybe not going way over the asking price. Part of what's going on right now is that we have millennials hitting the market, getting into that real estate purchasing mode, and that's like the biggest population group out there. So we have a huge influx of folks that are interested in buying. And then by some estimates, we are as much nationally as many as 4 million homes behind when it comes to new construction versus new household formation numbers, which we typically see. And construction is really slow right now just because the construction costs of materials is in some situations 3 or 4% what it was a year and a half ago. I'm sorry, 3 and 4 times the cost of what it was a year and a half ago. So, it's a long video, lots of information. Click that link down below for the my How's the Market page for the full metro area. And if you have any questions about what's going on in your neck of the woods, just give me a call, text or email, and I'll be happy to run the numbers for you there. All right, we'll see you next week.